Hello, everybody. This is Noah Rosenblatt. I am from UrbanDigs. This is Friday, so that means you're going to get your Week 11 Coronavirus Manhattan Market Update. The goal of this has always been since day one to track the COVID crisis on the Manhattan markets in real time on a week-to-week basis so that we could see the effect it has, we could see the ultimate bottoming, and ultimately we could see the recovery. I'm using ultimate all the time because I hope and pray it will be an ultimate recovery. But right now there is no recovery, and that's the ultimate conclusion from today. So let me just say that right up front, and let's get to the numbers real quick, and we'll explain what I'm talking about. Supplies at 5,085 continues to go down. Last week that was at 5,107. I thought for a little second that we might start ticking up. We are seeing an uptick in new listing activity, but it is not a strong enough force to keep pushing supply upwards. So last week was at 5,107. We're lower. After declining for the last 11 weeks. We started at 65.82 when this whole thing started, and we're down 23% in terms of active inventory on the market right now. Pending sales. Pending sales came in at 2,091. Last week it was 2,169. This continues its marchward down. We started week one at 2,650. So if you look at week one to now, it was at down 21%. Since this crisis started. Pending sales does not have anything in the front of the pipe bring it up. There's very weak contracts happening right now in real time. So you're going to see this measure continue to fall at a slow pace for longer than you would expect until we obviously see a bottom. But it's going to take a lot of new activity coming back on a week-to-week basis until you see that pending sales number start to tick up. So there's more pain ahead in terms of pending sales. You're going to see supply turn around before pending sales. That's the point. Okay, let's go to my dashboard. I'm on the UrbanDigs dashboard. I'm going to my 1 week trends. 1 week active new listings, we came in at 155. When I did this last week, it was at 145. I told you, if you're following me, we want to see that rise. We should be in the 500 level. That's what's normal. We're still very much down. When I first started doing this, we were in the 130s. We got to a low of around 70 at week 5. We bounced a little week 8 to 92, and we've been rising ever since, and we're at 155 today. Again, 500 is normal. So we're well off of the norms for new listing weekly activity in terms of this market. Okay, let's change this to contract signed. Let's go to our measure of demand. Where did we come in? 46. I want this number to go way up. We should be in the mid 200s right now. We hit a low in week 9 at 36. Okay, when I first started doing this, we were in the mid hundreds at 136. Week 9, we hit a low of 36. We bounced slightly off that low, but last week we came in at 48. And now we're at 46. So I was hoping that last week was 48. I was hoping we'd creep into the 50s. That's why I sighed a little bit. I was waiting for that number, and I was looking for that 5 on there, and I don't see it. Ultimately, you will see this pick up. I think buyers are just waiting to play in this game. Buyers want to see property. So once we get the restrictions eased and once property starts to be shown again, you should, at a delay, of course, see these numbers come up, because right now we're in the extreme end of a shutdown. And I would think a lot of the residual legacy deals where buyers have seen the property have since faded. And this is really a representation of sight unseen true COVID deals. Most of them have to be sight unseen true COVID deals, unless they're resurrection of deals months prior at this point. So, I mean, I'm thinking we're in the bottom in this 30s and 40s level, waiting to bounce, waiting. Off market, finally off market. We came in at 136. When I did this last week, it was at 122. That's not the best sign. I want to see that go down. I don't want to see that go up. When I first started doing this, you saw mass exodus, right? Sellers wanted out. So this was in the 400s. When I first started doing this, we hit a low of 117 on week 7. We bounced week 9 to 192. And have since fallen to 136 today. So I'm seeing a couple of things. I'm seeing new listings go up a little bit, which is good. That's what I want to see, but not nearly as much. I'm seeing new contract signs going down. It's still at the weak level in the 40s. It's quite lethargic. There's just no bid volume out there. And I'm seeing off market come down to the low hundreds, and we still want to see that come lower, okay? So when I add all this together, I'm going to give a plug to my boy Jared Anton from Elegron. When you add all this together, you look at a chart like this. I'm seeing it right now on your screen. You do see the decline of everything, and we're just not recovering, all right? The only thing starting to come back a little bit is new active inventory, but everything for the most part is down and depressed and at abnormal levels. All right, this is not seasonality. This is nothing. This is a complete unprecedented shutdown, and we're seeing the results of it in the real-time metrics that we're following. So that's your conclusion right now. Not much of a change from last week. We're going to be looking out for the change coming forward next week and the weeks to come. Until then, please have a safe and very enjoyable holiday weekend. This is Noah Rosenblatt. I'm from UrbanDigs, and I'll catch you next time. Bye-bye.